Good morning, guys. Happy Thursday morning. Well, it is that day of the month. No, not that day of the month. For me to put my wonky hat on and kind of give you a little bit of perspective as what's going on in the world economy. Today's the day that CPI comes out, Consumer Price Index, inflation numbers. Okay. And yes, as usual, we know that inflation numbers are fudged. But we're going to go off this, and I'm going to kind of give you the reason why I think the numbers are completely fake. And this goes right into why last week I said, all right, let's do this challenge. And granted, that was just on groceries or whatever, but let's go through it. So last month, November, okay, the November numbers that are reported in December. Inflation was running at 7.1%. And this month, what they're going to report today, December numbers, the Fed is expecting that, or the consensus, let's say, of all the analysts, say that inflation is going to come in at 6.5%. Okay, so inflation is coming down year over year. Okay, so this goes back to what I said before. This means prices are 6.5% higher than they were last December of 2021. Mind you, we were in the throes of inflation at that point too. So 6.5% on top. This is where I've explained many times. If it was at 10% and we had 7% inflation, okay, now it's $10.70. Now you're adding 6.5% onto the 1070, not to the 10. Okay, so we'll give you that idea. The numbers look great that they're coming down, if you will, but the prices are still going up. Okay, this is how statistics lie. Just saying. Okay, so we need to look at what is true, what is factual out there. Now, y'all know that gold and silver forever has been a hedge against inflation. Okay, we've talked many times before, a $20 gold coin in 1920 would have bought you a suit. A $20 gold coin in 2020 will buy you the same suit. Okay, a good high quality suit. Just saying. Okay. Same coin. That's how that works. Now, does anybody realize this? In the last 4 months, okay, so if we go back to the end of the fiscal year, September 30th, silver is up 35%. Gold is up 10%. Okay. Just saying. The markets are so not expecting anything great out of the CPI numbers this morning that right now at 549, the futures are up, the Dow futures are up a whopping 3 points, and the S&P futures are down 1. Okay, so that tells you how the CPI print today is a big nothing burger to the market. But what's going to happen to precious metals, and why is it that we can tell that this CPI number is BS? It's because of the price of hedges, of commodities, of gold and silver primarily. Silver doesn't go up 35% just because, oh my God, we're making a whole lot more solar panels or semiconductors. No. Silver and gold go up because people are buying it. Countries are buying it to hedge. They see something coming. Okay. And y'all know as well as I do that there's a whole lot of information that governments and countries have that trickles down to us way late. Oh, I don't know. The secret documents that Biden had that were found before the elections, we found out yesterday. Oh, just in case you didn't know, they found more last night. Yeah, at a different location. So Joe had a stash of them in multiple places, but he didn't know anything. So, but that's not what we're here to talk about. So we get into what's going on economically. The Fed is going to keep raising rates. To get inflation down to 2%, just to give you this, guys. To bring it down, they need to raise interest rates another 3%. Okay, start thinking about that with your variable rate mortgages, if you're going to buy a car, your credit card rates, et cetera, et cetera, et cetera. Interest is going to start going through the freaking roof. And this is where it gets very scary, because a lot of people in this country are in up to here right now because they're financing their groceries and everything of the sort. So what do you do? So if you think that's bad, that interest rates are going up and you're trying to hedge, the Fed is trying to pressure the stock market to go down. So your investments, yes, your 401ks, your IRAs, your regular cash account investments, the Fed is trying to push the market down. Just telling you, okay? You even look at bonds, like I was just talking about interest rates. Current rate on the 10-year right now, 3.54%. Okay, remember I told you 1.75 was critical. Yeah, this is the problem where we have with debt service. So the government, the reason the Fed is playing all this game with the interest rates and everything like that is not to help you. It's to bail out the government somehow. And this is where it gets really stupid. How do we know that this is all a problem? Let's talk about what the World Bank came out and said yesterday. The World Bank, okay? The World Bank yesterday came out and said they are warning of a global recession as they cut growth forecasts for 2023, okay? Growth forecasts for 2023, 0% growth in Europe, none. 0.5% in the United States. Remember, we're talking GDP, guys, okay? 4.3% for China. Okay. Want to know how bad that is? That is as bad as growth has been in the United States since 1993, if you take out 2020 because of COVID. So we have to go back 30 years to see growth this bad, okay? Remember what this was. This was the end of Bush's term, the beginning of Clinton's term, and this is where it's the economy, stupid. Remember that line? Okay. This is where we're going, and things are not getting cheaper. Okay, like I said, Wall Street's rallying around. 6.5%. 6.5% is not a good number, guys. It's better than 9. Okay, but I bet personally, and I don't have access to all the numbers that Wall Street analysts do and everything like that. I don't see us down at 6.5%. Maybe 6.7, 6.8. That's about, and I think that's going to freak out the markets this morning when numbers are released at 8:30. Don't go trading on that information. Okay, that's a gut feeling. I think they've got rose-colored glasses on when they think that we're going to see a 10% drop in inflation. Okay, but it all comes down to this: you have to get what you can now, protect your wealth, okay? And whatever that's in. If that's in cans of beans, if that's in boxes of bullets, if that's in bars of bullion, okay? It doesn't matter. Somehow, some way you need to protect your wealth, because your dollar, your greenback, is going to continue to get weaker and weaker and weaker and weaker. And I know people will come up over and over and over again and say, oh, the dollar's getting stronger. Actually, it's not, okay? The dollar index is down at 102. Mind you, 8 weeks ago, we were at 114. Now, all that is that's comparing the dollar to the euro, the dollar to the yen, whatever would be. Those other currencies are getting stronger. That's what's making ours weaker. The dollar index does not talk about how strong the dollar is for purchasing power. It's how strong it is compared to other currencies. Okay, just giving you that. But every currency, every fiat currency in the world is getting weaker and weaker and weaker and weaker. It buys less. That means it's getting weaker. What's the one thing that's getting stronger? Precious metals. And we've talked about this over and over and over again. I mean, as I look at it right now, here at now 556, okay, gold's at 1887, silver's at 2384, okay? If CPI comes in at 6.5%, expect to see gold shoot right through 1900. No problem. Gold will have a strong day, which is counterintuitive, okay? Because if inflation is going down, you would expect people to get out of gold. No, expect them to be going into it more, okay? Because it's still 6.5%, okay? Still a hedge. Like I said, 10-year treasury, 3.5%. Inflation, 6.5%. Cool. Lock in for 10 years a 3% loss on your money. Silver, pushing 24. If silver can get through 25, and I'm not saying today, if silver can get through 25, it ain't going to be long till you see silver at 30. Okay? I'm just telling you. If you can find some of these bullion dealers or whatever, I found some a week or so ago, where they sell them at a steep discount on premium. I think I got Year of the Rabbit silver coins for $1.99 over premium. Okay, that's cheap. That's like 8% premium. Grab some, all right? Sure, you're going to pay $26, $27 somewhere thereabouts for a coin right now, but if silver's at 30, okay, there's better than 10% return. And if inflation's running at 6.5%, guess what? You're doing exactly what you need to, beating inflation. I'll probably be back mid-morning after the CPI numbers come out. We'll see what the reaction is, but I want to give you the heads up now, just what to go on. If you're trying to figure out what to do, that's what to watch. See you later. Pinball out.